One of Nikola's top executives has resigned, and this news has resulted in the stock falling down by over 10% at market open on Monday. So why did he resign, and where is the stock headed? Keep watching as we answer all of those questions. But before we do that, subscribe to our channel, $1 World, for regular NKLA stock updates. Carrie Mendez, the individual who spearheaded the branding efforts for Nikola Corp's hydrogen business and successfully secured financing for up to 50 hydrogen fueling stations, has resigned from his position at the electric truck and hydrogen distribution company. The company made this announcement in a succinct filing with the Securities and Exchange Commission on Friday, refraining from disclosing the name of Mendez's successor in the public domain. Mendez assumed the role of President of Energy less than a year ago. He initially joined the company as the global head of energy finance in October 2021. Despite a request for comment on his decision, Mendez did not provide a response. During Mendez's relatively brief tenure, Nikola undertook significant initiatives within the hydrogen domain. Notably, the company established a noteworthy partnership with infrastructure startup Volterra Inc. This partnership aimed to secure funding for up to 50 hydrogen fueling stations, enabling hydrogen-powered fuel cell trucks from Nikola and other manufacturers to refuel. This venture involved a substantial investment of $10 to $20 million per station, potentially totaling as much as $1 billion. Presently, there is information available about 8 stations in California, each receiving financial backing from the state as part of Governor Gavin Newsom's commitment to fostering a clean and renewable hydrogen economy. Additionally, Mendez oversaw a year-long campaign to brand Nikola's fuel distribution as Hyla, a development that was officially announced in January. Nikola Corp's progress in advancing its hydrogen infrastructure owes much to collaborative partnerships, as emphasized by Carrie Mendez, who noted in a May interview with FreightWaves that the high costs associated with hydrogen development make it impractical for Nikola to tackle alone. Given the substantial financial demands of truck development, Mendez underscored the essential role of partnerships in infrastructure expansion, drawing from his extensive experience at BP, where he held various roles involving energy trading. Mendez highlighted the collaborative nature of infrastructure development. Though BP and Nikola initially hinted at a partnership for fueling stations, no concrete outcomes have emerged. Mendez lauded BP's innovative initiatives in electrification, hydrogen, and renewables, affirming their eagerness to make a decisive entrance into this burgeoning market. In a strategic maneuver, Nikola divested its ongoing Phoenix Hydrogen Hub venture in Buckeye, Arizona to Fortescue Future Industries for $24 million in July. Despite stepping back from active development, Nikola will continue to be a consumer of the green hydrogen produced at the site. This dovetails with the previous agreement with Fortescue to jointly explore substantial green hydrogen production facilities in the U.S., highlighting Nikola's commitment to remaining a key player in the green hydrogen ecosystem. Addressing financial challenges, Nikola's move to sell assets echoes its earlier decision to dissolve a manufacturing joint venture with Iveco in Europe, aimed at producing electric and hydrogen trucks. This pivot resulted in a transformation where Iveco rebranded the trucks as Nikola's Tre models, built on the foundation of Iveco's S-Way platform. Amid efforts to raise capital, the recent shareholder approval to double authorized shares grants Nikola the ability to issue new stock. Nevertheless, the influx of additional shares has contributed to a decline in the company's stock price. CEO Steve Gursky acknowledged the need for capital infusion and outlined strategies, both dilutive and non-dilutive, including exploring asset sales. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's see how the Nikola stock is performing in market. Nikola stock displayed notable volatility throughout the day, with an opening price of $1.74, hitting a high of $1.99, a low of $1.71, and ultimately closing at $1.96, marking a 4.81% increase. Although the stock has experienced fluctuations in recent months, it currently stands above its record low of 52 cents. Several factors might have contributed to the upswing in Nikola's stock price today. The company's recent partnership announcement with Republic Services to establish hydrogen fueling stations for its electric trucks likely garnered investor interest. Moreover, the ongoing expansion of the electric vehicle market, which is projected to reach a substantial valuation of $800 billion by 2028, has likely bolstered optimism. Additionally, the recent decline in interest rates could have attracted investors towards growth-oriented stocks like Nikola. Notable analyst projections for Nikola's stock price include D.A. Davidson's target of $2.50, Credit Suisse's estimate of $2, UBS's projection of $1.50, and Morgan Stanley's more conservative forecast of $1. Despite the challenges and fluctuations, the stock's performance today signifies a step forward from its previous lows. Also, Nikola has recently entered into a securities purchase agreement with investors to facilitate the sale of senior convertible notes in a registered direct offering, with a total aggregate principal amount of up to $325 million. These convertible notes can be exchanged for shares of the company's common stock, each with a nominal par value of $0.0001 per share. The company anticipates an initial closing for the sale of convertible notes amounting to $125 million in aggregate principal value around August 21, 2023. Unlike traditional offerings, this arrangement is conducted directly between the company and the investors, bypassing the need for an underwater or placement agent. Consequently, no selling commissions will be disbursed to any party involved in this offering. Following the initial closing, the company expects to receive approximately $124.5 million in net cash proceeds. It's important to note that each of these convertible notes will accrue interest at an annual rate of 5%. This interest will be paid retrospectively on the first day of each calendar quarter, commencing from January 1, 2024. Furthermore, as a prerequisite for the initial closing of this offering, the company has undertaken the action of terminating a specific common stock purchase agreement with Tombstone Capital, LLC. This agreement had been dated back to September 24, 2021. This move to issue convertible notes and raise capital through a registered direct offering reflects Nikola Corp's strategy to secure additional funds for its endeavors. It provides investors with an opportunity to convert their notes into company shares, aligning the interests of both parties. The termination of the previous stock purchase agreement signals the company's intent to streamline its financial agreements and potentially enhance its financial flexibility moving forward. On the other hand, Nikola has issued an update regarding its recent voluntary recall of over 200 of its electric vehicles, or EVs, after conducting an investigation into the battery packs. The company revealed that these events could potentially result in significant expenses, casting uncertainty on when production of their battery electric trucks will resume. The implications of these developments could adversely affect the company's brand, business, financial condition, results of operations, and cash flows. Earlier in August, Nikola announced the recall of about 209 Class 8 Tre battery electric vehicles as a precautionary measure. This recall was prompted by an issue identified in a single component of the battery packs. Subsequently, the company temporarily paused new BEV sales. It's important to note that this pause does not affect the production of their hydrogen fuel cell electric vehicles, or FCEVs, which have a distinct design and are proceeding without interruption. Nikola shared that Exponent, a third-party investigator, determined that a coolant leak within a battery pack was the likely cause of a truck fire that occurred at the company's Phoenix headquarters in June 2023. This conclusion was supported by a minor thermal incident involving an engineering validation truck at the Coolidge, Arizona plant on August 10, 2023. Internal investigations conducted by Nikola's safety and engineering teams indicated that a single supplier component within the battery pack was the probable source of the coolant leak. The company formally filed the voluntary recall with the National Highway Traffic Safety Administration on August 15th and simultaneously imposed a temporary hold on the sale of new BEV trucks. The financial impact of these events remains uncertain. The company expressed concern that if the costs associated with these circumstances exceed their expectations, or if the resumption of BEV truck production and the sale of existing inventory are delayed, their business, financial condition, results of operations, and the ability to meet previously stated delivery expectations for the remainder of 2023 could be negatively affected. All in all, this definitely was a setback for Nikola, but we're bullish on the stock and believe that the company will likely recover from this soon. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think the stock will make you rich or not in the comment section. Hit like and subscribe to our channel $1 World for more such penny staff videos, and we will see you in the next one.